What's good, traders? Welcome to another video. Well, today, what does we get to talk about FOMO? Well, uh, basically, FOMO means whereby you have the fear of missing out, and this is a deadly trap for so many traders, especially those ones who are still new, and of course, those ones who are still struggling with psychology. So, when it comes to FOMO, this is more of a psychology problem, and the reason for that is because it has nothing to do with technical. You could be good when it comes to the strategy. You have mastered your strategy. You're good to other areas. For instance, you're good when it comes to risk management, but you are really struggling with whereby you find sometimes you get to have that feel that dopamine whenever you get to see the market gets to have a spike. Maybe some news have just come out. You're feeling that urge to be part of this market. So there's these FOMO being is something that is real, and of course, any trader will tell you at some point, especially the profitable ones, they will tell you for sure at some point they have experienced it, and others they even struggle with this same problem for years. So when it comes to FOMO, I want us to get to look at some of the signs that they get to show that you're struggling with this, and of course some of the things that you can get to put in place to fasten your process of learning as well as eradicating this problem. So first thing first, let's talk about which are these signs that tell you that somebody is struggling with FOMO. So one is whereby you get to find yourself, you're feeling you want to be part, or you want to participate, you want to take a trade whenever you get to see the market has these huge spike. For instance, whenever we have news coming out, especially the high impact news, the market usually gets to jump a few pips or thousands of pips, especially for market like gold. And if you're a trader and you hadn't taken any trade before the news came out, you might feel like the market's moving without you, and you want to maximize and be part of that trading move. But remember, we usually have other rule whereby you have to wait for a candlestick, especially the 4 candlestick, to close before taking any trade or making decision on whether to take a particular trade. So whenever you get to see that huge spike in the market and you're out there, there's a high probability that you feel that urge to be part of that trade, and that's where FOMO kicks in. So whenever you get to see that you're struggling, you're feeling that urge to be part of the market, yet the market hasn't, the candlestick hasn't closed, be sure enough that you're suffering from FOMO. So another thing is whereby you get to find yourself, you're entering into trades without even following your plan. Just because you're seeing some engulfing candle, the market is showing some momentum in a particular direction, yet the market hasn't met your of course the rules that you are supposed to follow in order to take any trade. So that's also a huge sign to show you that you're struggling in FOMO. Among those problems, of course, is whereby it also comes with things like you increasing your position randomly. You get to see, like for instance, you get to see one market is showing some trend. Instead, or if you have been risking 1%, you find yourself you want to open up a little bit more. You want to take around 3%, yet your normal trading risk management allows you to take 1%, but in this one you want to open up a little bit more. So in such situation, you realize that your emotions, your dopamine is really affecting you, and of course resulting to FOMO. Among that problem is also you get to see a trade or a stock which is just trending on social media. For instance, like for my case, I'm not active when it comes to gold. That's a market that I haven't back tested for a while, or I'm not very confident when it comes to my strategy with gold. So I get to find so many traders, they are really enjoying or getting some profit from gold. Now I'm tempted to get into that, yet it's not my specialty. It's not a stock, or it's not an item that I'm good at. So I find myself I'm tempted to take part of that, and that's the sign that you're really feeling that you're being left out, and that could be a very big disaster which is yet to happen. And of course, the last one is whereby you get to feel like you have this regret feeling whenever the market gets to move without you. It's okay sometimes to miss out some opportunities, and of course you can't catch all the opportunities, especially if you're a person who has a very good strategy that you get to follow every now and then. So it's very, very okay, and it's normal for you to sometimes feel like you're missing out some opportunities, but you should right away recognize that that's FOMO kicking in, and of course take the proper precaution. So this leads us to whereby there are some of things that you need to have in place in order for you to protect yourself from FOMO. And which are these things that we are talking about? Number one is whereby every profitable trader will tell you they have a well-written trading plan. You must have a plan that you must follow before taking in a trade. For instance, for my case, I do have a well-written checklist from a weekly time frame, daily time frame, and of course for entries, which is 4 hours daily time frame, 4 hours time frame. I usually have those things that I get to check out in every time frame, and if one doesn't check out, I can't take that trade. So this way, it really, really gets to help me from feeling like I'm missing out. Also, another thing is whereby you should consider setting alerts. Like as I'm doing this video, I'm waiting for a trade on BTC USD. Right now, we are around 11 minutes to the 4 hour candlestick to close, and I had to stay away from the charts in order for me not to feel that that pressure to take that trade. I have to wait for the 4 hour candlestick to close. An alternative is whereby you can set alerts when the market gets to this position and the candlestick gets to close. You can now go ahead and check out that the price action, and of course make a decision on whether to take a trade or not. So it's very, very important that you get to have these things running and of course in place for you to protect yourself from FOMO. Also, another thing is whereby you need to keep the trading journal. What do I mean by this? Is whereby you need to before taking in a trade, in case you get to take a winning trade, a losing trade, you need to write down what exactly happened and what you can get to rectify or improve, so that you continue this way having a strategic edge, and of course a trading plan which you can get to be confident enough, and whenever the opportunity gets to present itself, you can have that confidence to take that trade without hesitating. Also, another thing is whereby you need to focus on your risk to reward. For instance, for my case, I usually get focused on two to that is 1 to 2. I usually risk 1 to make 2%. So whenever the trade doesn't give me that, I'm not interested in taking that trade. And whenever the market gets to go to my direction, it gets to 2%. In most cases, I get to protect myself from feeling that is greedy. I just go ahead, once it gets to 2%, I close, and I'm contented with that. So these are some of the things that you get to learn with time, slowly by slowly. But sure enough, if you don't quit on trading, you will learn some of these things. They might take longer than other people, but one thing is for sure, you must learn for you to see profitability. So basically, that's what I had for FOMO. Let me talk to me in the comment section if you have been struggling with this, and of course, if you want some assistance, you can just go ahead. You also let me know in the comment section, and we can get to have a discussion on the same. That's it for today. See you in the next one.